proudly to present now Martin Billig from Cushman & Wakefield, Alfred Garbe from Hansteen, and our key speaker Christopher Garbe from Garbe. And we start with a short presentation from Christopher, and then we hope we'll have a discussion involving the audience to a great extent. Thank you.
Yes, perfect. Welcome. Yes, let's start on the logistic market. I'll give you a bit of overview of how do you work that? So originally we had Steffen Ricken from CORESTATE here and Jan Dünzelmann from Fiege. Both called up. Jan called up this yesterday and said, "I'm incredibly sick. I can't come." And he's never sick, he says. So he sent his apologies. And then this morning, Steffen called and said, "Look, mate, I can't come as well. So I'm I'm sick too. So in Germany there's like bad flu. So don't go back to Germany. Probably get sick there." And I'm a survivor, you know. So, but I'm glad that then Alfred, which has this tremendous name of Garbe, but not working for our company, has joined us. So thanks, Alfred, on short notice, and Mr. Billig from Cushman & Wakefield as well. So I think we have super substitutes here, and even especially on Alfred's side. Getting the angle of light industrial and value-add logistics into the panel is probably a good add-on, and so hence Alfred hasn't really prepared. I'm trying to chuck him some pieces in terms of what's the things on light industrial while I go through my presentation. So apologies if it's a bit of how you call it, like Toastmasters or whatever. So yes. So let's start. So myself, Christopher Garbe, I'm a shareholder and of the Garbe Group and managing director of Garbe Logistics AG, which is one of two major business arms. The Garbe Group is focusing, and just quickly to myself, I did a BA in economics in Hamburg, and then I did an MBA in Australia. I worked for Westfield in the shopping center business in Australia and Sydney, and then I did some real estate development here in London. That was tremendously successful until 2008 or 7, then the financial crisis came. Then it wasn't successful anymore. So, and since 2010, I'm more or less leading the Garbe Group together with our shareholder, the Nixdorf family, and I come to that in I'll give you a bit of an overview. And shall we, you would make the moderation, shall the other people introduce themselves first, or?
No, I think we have the presentation first, and then we can introduce ourselves. So
okay, good.
I can remember.
No, but because normally the other people would have been introduced now. So, okay, we have got a bit of an overview of I keep it quite slow, quite quickly. That I don't want to bore you. Give you a bit of overview of Garbe Group. You see there is the Garbe Group is nowadays a joint venture between the Garbe family, which is represented by myself and my brother, and the Nixdorf family, which we took in as the perfect. So, which we took on as an investor, and that joint venture works since 2010. So logistics is one of our major focus, and I come to it in a minute. And the other business arm is property development, which we're focusing on residential, the residential market in Germany, so to say. And we do that in the regions of Hamburg, Cologne, Düsseldorf, and Bonn. We might look into Berlin now, and the project pipeline is at the moment 400 million euros, which we have in the development market at the moment. Fontenay is an add-on to the property development business. It's like a property manager, which manage most of the units which we develop in our development arm. But coming to the major focus now, which is good. Which comes to Garbe Logistics AG. Garbe Logistics AG is the only German fully integrated logistics platform. Blimey, what's going on here? How does it work? Okay, so okay. It's a fully integrated logistics platform, similar business model to Prologis. We do everything from fund management to development to property management. So we serve the customers on one side and on the investor side and also on the tenant side. We are after Prologis and Goodman, the local hero in the market. We're focusing only on Germany. We've got a few sheds in Holland and one in Austria, but our major focus is Germany. And so that's our key market. In total, we manage around about 1 billion euros and 1.5 million square meters in total. Occupancy rate at the moment is around about 98%, and has been over the last few years in that level. So you can see on that basis, logistics is high in demand from the tenant side, and also from the investor side. We come to in a minute. We can say it's flavor of the month at the moment. Everybody wants to get into the market. There are several institutional investment funds at the moment in the market. One of is the Garbe IVG fund, which we set up with IVG together. Then Warburg Henderson is in the market with a German institutional fund for logistics, and also the UBS. Beside that, we have a number of international players coming into the market. We see lots of corporations and teaming up at the moment between asset management platforms in the logistics sectors and international investors. So we most recently saw that Prologis made a joint venture with Norgis, and we saw Point Park Properties teaming up with TPG. We saw Varian going up with Hoops. So there are lots of big international investors now teaming up to get into the European logistics market, and it also shows how interesting the market is at the moment. I'm switching to the next slide. I'm more or less explain what we do. We do investment management, asset management, project development, and fund management, so the completely integrated value chain. We do that for the last 25 years, so to say, and that's the institutional funds we manage at the moment. The first one is which we established in 2004, was the UBS or the Ergo Trust Logistics Fund number 1, which is one of the most successful institutional logistics funds in the market. Has performed an average 8.5% of IRR since that time. That was within the global financial crisis. So that's a good example of how sustainable logistics investments can be over a long period of time. Besides that, we have a development fund, which we do most of our developments out of it, and an investment fund, and the IVG Garbe Logistic Fund, which is our active vehicle at the moment. The next one is introducing CORESTATE, which is not here, so I'll skip that. Fiege is not here either, so skip that as also. So now we come to your company. I think you want to say something about it?
Well, I'll do that later.
Okay, you do it later. Perfect. It's like slapstick here. Come on. Okay, so that's a bit of an overview of the market, which we see there. What are the most recent drivers in Germany for logistics? For example, we have got new infrastructure hubs, so to say. We see the Jade-Weser-Port, and which is similar to the London Gateway and the scheme in Rotterdam, which we see at the moment. However, I must say Jade-Weser-Port is not yet a success story. It has not fulfilled the expectations so far, but time will tell how that works. But that has to be watched. The e-commerce at the moment is one of the major drivers of logistics in Germany. You see Amazon is more or less on a yearly basis producing new larger sheds, and that is one driver, because followed by that the parcel suppliers like DHL, UPS, DPD, you name it, they are heavily investing in their cross-dock network, in their distribution networks, to ensure that parcels being delivered within 24 hours into the market. And I think that's a discussion, or that's a focus we're gonna discuss later, of how these e-commerce trends changing the supply chain within logistics, and what would that mean for investing into the German logistics market, so to say. It's also quite interesting to see that a couple of investors, investors we speak to seeing like logistics as a new retail, because they're believing that quite a lot of this current retail activity is further shifting to the logistics or to the e-commerce, and then logistics is getting into more focus. So that are thoughts at the moment within the from investors which we see, and that's probably quite interesting. And maybe later on Mr. Bailey can then speak about how like the yields between logistic and retail compare into those markets, and where the trends could be. Within the e-commerce market, we see 24-hour delivery is getting more and more important. That's actually quite an interesting finding of studies, that it is more likely that people give their parcels back, so they send it back to Amazon or to their producer if they didn't get this thing within 24 to 48 hours. So if you break this 48-hour barrier, the chances that you return your parcel is increasing by 30%. So it is quite vital for the internet retailers that the parcel is delivered in a short period of time, and that forces, so to say, the parcel providers like the DHL, DPDs, and so on to ensure that these parcels are being there on time. And if you can't do that, you're out of the market. So that's one reason why those companies are investing heavily into the infrastructure network to ensure that those parcels being delivered on time. So you see that e-commerce is affecting the logistic market quite heavily. And through that, like a new type of logistic shed is needed. Our company, for example, we are in cooperation with Zalando at the moment to see if we can design a new internet shed, so to say, which can be used by multi-internet retailers, so to say, or internet users, so to say, but is not the same as a generic shed at the moment, and we are in discussion with them to design that. Another type of new logistic assets occurring are cross-docks. Are those infrastructure networks. That's those hubs which you need to get your parcels on time. So on the basic thing, from a big Amazon shed in Bad Hersfeld, you order something to, like, I live in Hamburg, to my doorstep in Hamburg. So what's going to happen? Like the big Hermes truck is going to Lüneburg, for example, and there it docks on into these cross-dock centers. So big truck changes parcels into small lorries, and they come to the doorstep. So Lüneburg is quite good, for example. It's close to Braunschweig and this area, and to Hanover and Bremen. So from there it can be distributed in all regions. So we see those kind of cross-docks hubs occurring quite heavily. Good thing on those things is that the tenants take 15-year contracts. Investors, but saying is, yeah, but they're not generic. You can only use them for for these parcel shops, so to say. So from one side, the investors are saying, yes, they're not like the generic logistics set. On the other hand, you could see 15-year leases of the likes of DHL, and so that might be a new investment class within the logistic field. I think we can also talk about eco considerations and restriction on industrial and commercial use zoning, for example. I mean, one thing which is quite particularly important in this market is that if you look at the sustainable strategy of the Bundesregierung, of the German government, it says that they only can seal off. The aim is to seal off only 30 hectares per day, which is a nice aim to do that. However, today it's 70 hectares. So what's going to happen? Where in residential, for example, you can probably build up like another story or two or four, whatever, on your house, which doesn't affect the sealing off of the land. However, I have not yet seen, despite in Singapore I've seen one, but like not in Central Europe, logistic shed which has 3 or 4 stories. So that will have a major effect on logistics as well, because it's quite a land-intensive asset class, and those regulations will limit the space where newly built sheds can be developed. So that's probably quite interesting if you look into the secondary market or light industrial, that the intrinsic land value probably will increase over the next 20 years quite heavily, because you won't find new sites, so to say. particularly on those considerations, long contracts are quite interesting as well. We come to that in a minute. Market overview. And you don't mind if I then ask Alfred to chuck into...
On the light industrial, fine.
Okay, perfect. Thanks. So, market overview. What do we see at the moment? Thanks, Christopher. That's so kind of you. So, market overview. What we see is at the moment, as I said at the beginning, a flight to core at the moment. Like lots of international investors coming into the market and paying really high prices. We have seen so far 1.9 billion of transactions in the logistics market so far. Last year we have only seen 1.7 in the full year. So you see there is inherent interest in logistics. Drivers, as I said, are international investors, besides the local funds which have been set up, but they're not going to see the prices. And we are on price levels which are probably over and beyond the 2007 peak, which we saw before the global financial crisis. The best example for that is probably we have seen Prologis just bought the line portfolio from Schroders, which they're apparently, and look, that's what was reported from the market, that they bought these things for close to a multiple of 15 of the current rent, and they're believing that equates to a fully let shed of 13.5. That is quite a hike in pricing. That translates into total numbers that we had on that transaction. They're bidding around 165 million. Our fund has bid 130 million. So that's where logistics is at the moment. That the local established players can't see the price hike, but international players are bidding over the odds at the moment. That's the logistics market as it is. Alfred, do you want to check in how the secondary and light industrial market is?
Yes, thank you. So I'm Alfred Garbe. I'm actually often mistaken to work for Garbe, but in fact I work for a company called Hansteen, and we are a UK REIT investing in pan-European light industrial and logistics assets with a focus on the UK, Germany, Benelux and the Netherlands. We do have a substantial portfolio in Germany, and in fact I think when we started in Germany in 2006, there was quite, the market was quite different and has changed quite a lot, but I think in general it's fair to say that the light industrial and logistics, or especially the light industrial and secondary logistics markets, wasn't very established at that point. Now what we've seen over the years, an increase in interest. I think that goes in line with the latest transaction we've seen, where the investors' interest is moving more from core to core plus, really, because of an increase in demand, and that also basically means that there is more demand for light industrial and logistics stock. Having said that, we have a quite a different investment approach from logistics investor. We are focusing on multi-let buildings and trying to add value through active asset management. So we do put an emphasis on having a strong local asset management teams in the country we operate in, and then actually try to create value over time. So in general, interest in light industrial and secondary logistics is increasing as well. Yields are, I would say, around maybe 8.5–9% at the moment. And generally in Germany the market for this asset class is especially good because you have the secondary towns we've talked about before with quite a strong Mittelstand, so medium-sized companies who are occupying these kind of warehouses, and for that reason the occupational market is quite strong. Rents are stable to slightly growing, but also not as volatile, I would say, as in the UK probably, and investors' demand is increasing.
Martin, on the valuation side, who finances what, and how is the big box risk taken into account for vacant possession risks?
Yeah, it's Martin Belig from Cushman & Wakefield. I'm responsible for the valuation department in Germany. And it's interesting how the thinking of the bankers are developing, because and how this relates to the development of the length of the leases in logistics area. We experience that the leases are shorter and shorter, and the bankers, they need to have the leases mainly longer than the loan is, and this has immediate impact on the pricing of the properties. And when we are discussing this on the banking side and the investor side, and we see that there is a huge discount regarding this discrepancy between the very short lease and longer loan periods. This is what we see on the valuation side.
Okay, thank you. And Christopher, on the e-commerce side, we have advised on a series of logistics that are like in the interface of e-commerce and the classical logistic. The operator risk, how is that taken into account, and how do you cope in finding investors in that field?
I think Amazon struggled at the beginning to find an investor to build the sheds, but then I think Goodman stepped in and built all the sheds, and did it quite rightly, and they found it and investors for that as well. So I think the e-commerce retailers or e-commerce traders were facing particular concerns at the beginning, but as I said, now like Amazon and Zalando are well established in that market, and all the investors are looking into it. But you have to be quite careful. I mean, we have seen Verion winning the bid in Hanover for the Netrada shed. Netrada is in trouble, and I know that we were negotiating with the owner and saying, look, we need to build a generic shed. Somebody else has to use that, otherwise the investors will be in trouble. And we didn't get it at the end, because we said we want to have a generic shed. And now what's happened is even we have an internet boom, and everybody's saying focusing on internet, but like there it is, Netrada is in financial trouble, and nobody knows if they're gonna go through that. So that's we have to be particularly careful that you pick the right quality and the right design of the shed, so it can be used for other logistical usages. And you have to be in the right location as well, unless you have super covenants. I wouldn't like, if DHL would have built the shed, I probably would have made the compromise and saying, you can't get a better covenant, 15 years lease, okay, then like let's do it. But with Netrada or Zalando or like people like companies which are not in AAA covenants, you have to be very careful. Otherwise, you probably end up with the wrong shed in the wrong location with the wrong design, and then you can probably make a paintball already out of it.
And the cross-dock concept, is that superior to these operating risks?
The good thing on the cross-docks is that you have these DHL, Hermes, UPS, DPDs, like these AAA covenants on it, and but also there you have to be careful on pricing. If somebody, I've been offered a DHL cross-dock shed for, I think, a multiplier of sub 6 or sub 7, somewhere for multiplier of 14, so yields of 7, and with a 15-year lease. I would have been careful. If it's in the middle of Frankfurt, yes, you probably can say the chances that will be reused is quite high. But if you look into Yarman or other places, I would take an approach. You can take those, you can buy those shares, but you have to be sure that after the vault is ending, that you have to have your money back at least. I mean, that's the approach one has to take. So, particularly on cross stocks, I think a portfolio approach where you look to grow a bigger portfolio of a size of 200 to 300 million is probably the way to go, because then you have a bargaining power against those companies as well, and those, in our opinion, those cross-stock networks, then they're going to be more like infrastructure, like a telecommunication network. You need a infrastructure network for your parcels. So that's probably how one should look at it, rather than a single asset approach. And if you do it as a single asset, be very careful. Location. Location.
I think that's a good word for the panel to close for all real estate investments. Any questions from the audience? Yes.
It sounds like you should be selling.
Yes, we did.
So, are any buyers in the auditorium who would like to respond?
Probably sold too early.
Yes, correct. No, you'll be right. I mean, we were quite proud at the beginning. We made it 120 million transaction to one of the big American fund managers, and to that time that was really the leading price, so to say. If I would have sold it 9 months earlier, probably would have got half or like even a one multiplier more. So, but on one hand, you never know where the market is, So don't catch a falling knife.
I think we can close and leave some room for the technical due diligence, so they don't have to take the blame for having late lunch. Thank you very much for the panelists. I think we took 2 players out, which were supposed to be here, had very good substitutes. Thank you very much.